What's up, apes? Hey, I'm gonna do something a little different today. I never do TA. I've told you guys I don't like to put TA online because a lot of apes have been crazy wrong from $70 all the way down to $13 on their TA. And it's no offense, it's impossible to predict where this stock is gonna go, especially AMC. Every bullish breakout pattern that we've seen ends up flopping. It's the manipulation. Every bull flag, every pennant, every head and shoulders, every ascending wedge, descending wedge. It's just something that I don't really like to do, but I did want to talk about where we're at now and my plan. This is my plan, not financial advice. I'm not telling you to do it, but my plan to keep continuing to add shares, but make value in them. So I hope you guys can see it okay. This is AMC on the daily. I've got 3 to 4 main lines on this. One is 2092, which is our next, in my opinion, real test point to break out above. The next is $19.43, which is our current level. We seem to just be kind of bouncing back and forth, oscillating at right there. So that's a level I like to watch to see if we break this. I know we're going to retest and then we're in the money, and I'm digging that. My third level is 1729, and it's more important right here, because this is the level where I start preparing myself to go, I might have a buy opportunity, so I better put some money aside for it. I don't wait until we're down in the dip to buy and not be ready for it. So if I see us touch 1790 or 1729, I'm going to start preparing to buy the dip. Like, hey mom, can I borrow $20? There's a dip coming, you know? That's called an investment plan. That's not waiting until it's down back to $15 and going, oh no, I should have did this. I shouldn't have bought beer this weekend. So just watch that level carefully. That's what I'm doing. When we get below it, I'm literally sitting watching, because we get below this, we retest this green box, right? This is my buy box. When we're in this box, I start to buy, but I don't buy all at once. I'll buy a little bit up at the top around 15. I'll buy a little bit at 1470. I'll buy a little bit at 1430. And if we magically get back down into 13, which I do not think we will break this yellow line, this is my organic price trend line that I've talked about for months, that I believe this is our fair organic price value bottom for AMC. And as we've been going, it's recorrected down to it and played back up right across this trend line. So I'm wondering if maybe we bounce it again one more time, which don't be upset if we do. We've already been playing this game. You know what the hodl game is. But this is my buy zone, right? And I actually need to extend the box a little bit because I want it to go out to the tip of the yellow organic price trend line. From the last dip at 13 to the final buy opportunity that I'm going to take at 15 and below. So right about there. So right here. Once it's past this, unless we see some insane price action to fall down below here because of just insane crazy manipulation, after this, I'm going to stop averaging down because it's not healthy for me anymore. If I see it drop lower, I might pick up some shares just to increase my position, but I already have quite a few. So I'm going to have more money than I know what to do with if this thing squeezes anyways. So I'm not sitting around stressing about, oh, I need more shares because this thing's going to pop off. We own over 90% of the float. At this point in time, I'm pretty sure anything you're buying is probably a synthetic share. So I'm not saying to not buy them. I'm just saying it's so wild right now that retail owns so many shares, and my theory on that is, I've had to correct this. I said the 1.5 billion shares out above the float. I think retail owns 1.5 billion shares. I think everything else past that is 2, 3, 4, 5 billion in synthetics that the institutions and the banks are having to use because they don't have a choice. They're in the hole so deep that they have to cheat and use these synthetics to try to save themselves from going out of business. So that's it. That's my 3 lines. This is my main breakout line, my pre-warning breakout line, my pre-warning downward breakout, get ready to buy line, my buy zone, Down here in the green box, this is where I will finish my averaging down and then wait until we get back above 20 bucks. And this is the yellow line, the long-term organic price trend line that it's been respecting very well for a long time. So that's my TA, not financial advice. I just see so many people losing faith in averaging down because all these YouTubers and streamers were in here going, oh yeah, 60 bucks, yeah, 50 bucks, oh, 40 bucks. And it's been, I'm not going to lie, a disaster for some people. Some people are really hurting right now. And I am just showing you what I am doing in hopes that it helps you correct your position. It's not financial advice, but to correct your position. And bag holding sucks, man. I've done it. I've been there. I get it. I just think mentally preparing yourselves, and Keenan Grace talks about this, man, mentally preparing yourselves for price action and getting your wallet ready at the right times, which is your pre-warning breakout lines, getting yourself ready to buy those dips correctly. So you're not just cost averaging, because this is a terrible stock to just buy whenever to cost average, because you're going to end up upside down really quick. But these movements have been incredibly predictable so far. You can see where they just start piling in shorts. I mean, every time it's just short. It's not selling. Nobody is selling. We own over 90%. So just try to predict when they're going to short. Look at the organic trend line. Watch your pre-breakout lines here for upward, here for downward. And if you get hit in this green zone around 15 bucks, that is where I'm going to buy personally. So other than that, I don't think we can check Twitter real quick. I guess there was some big thing with Stewart on. Ooh, oh, perfect. Mark posting about Ken Griffin. Oh, what a treat. What a treat. Citadel billionaire Ken Griffin defends Melvin's stake against insane theory at Andrew Sorkin. Isn't it time to revisit this? Is Plotkin still one of the finest investors of his generation? Seriously, can't we call this sham for what it is? And this is from CNBC, another article where he's defending Ken Griffin, which we all know that, in my opinion, Ken Griffin bailed out Melvin Capital, so Melvin didn't get margin called because they were so upside down on their position. He did it so the dominoes wouldn't fall. It protected Ken Griffin's short position, which to me is absolutely insider trading when one hedge fund gives $2 billion to another hedge fund to protect the play. Now they've taken that money back. Citadel has requested that $2 billion back. They already took $500 million because Melvin is so upside down on Facebook and Netflix. And from what I hear, a firm, but rumor is they were in on some kind of Russian investment that got frozen and now they are up Schitt's Creek. I personally believe Melvin Capital is crashing their fund on purpose because there's some ulterior motive in Melvin going out of business that is beneficial for Citadel. Yeah, so there it is, guys. That's my video for the day. I hope that the breakdown of the chart made some sense. The music playing in the background was called The Rumbling by the band Sim. I absolutely love that song. It's the season 4 part 2 opening to Attack on Titan. So it gets me pumped up. Anyways, guys, have a great week. Froggy Stonks out.